All opinions expressed by podcast participants are solely their own opinion and do not reflect the opinion of DigOp or their respective organizations. This podcast is for informational purposes only and should not be relied upon for tax, investment, or legal related decisions. Podcast participants may hold positions in tokens or assets discussed over the course of this conversation. Now, with that out of the way, let's jump in. All right, here we go. James, thanks for joining us, man.
Great to be here, guys. Appreciate you guys inviting me.
Yeah, well, looking forward to diving into what you guys are doing at Digital Prime Technologies. I'll let you give your own intro, but for us as participants who have been in this space since 2021, we've seen sort of like the evolution of the asset class, the evolution of counterparties. Back in 2021, I wouldn't even really say there were prime brokers at that point. I mean, there were prime brokers, to be clear, but it's like it was kind of like extremely underdeveloped, and things have really changed a lot in just a few short years. So, looking forward to diving in. But with that, James, would love for you to just give your background on yourself and on Digital Prime Technologies.
Yeah, happy to do so. And as you mentioned, I'm James Runnels, co-founder and CEO of Digital Prime Technologies. We're a venture-backed startup focused on the infrastructure in digital asset prime brokerage and borrow lend. By way of background, I come from traditional markets. The majority of my career has been spent in traditional prime brokerage, working at various investment banks and broker-dealers. Our team also comes from traditional finance and all with that same focus on their background. So we bring to the table a lot of expertise and experience in traditional prime. And our goal, since we were seeded in late 21, early 22 by Cowen, was to build the necessary infrastructure and technology really that would allow more of those traditional participants, the traditional prime brokers, to enter the space. And just to kind of touch on your opening remarks, right? A lot of progress has been made in the last several years, and really on the infrastructure side, right? The infrastructure needed to facilitate, what would be considered a meaningful, prime brokerage offering, right? And obviously it varies from organization to organization, but there's a lot of great groups out there, some household names in the digital space that offer very comprehensive prime solutions. And there's also some really wonderful startups that are focused on the space as well, being led by some extremely talented folks. So a lot of progress has been made, and we're excited to be part of that journey as well.
So when you're talking about technologies that will help the traditional participants enter the space, like, can you be kind of explicit, like what exactly those like missing points are?
Yeah, so when you just take a step back and you look at what prime brokerage is in a traditional sense, it's a grouping of various services, including custody, execution, financing, borrow loan, things along those lines, right? And typically your prime broker would be your one-stop shop for all those solutions, right? Obviously there's been a lot of progress made with custody. I think that was kind of, looking back on the early days of crypto, that was one of the main focuses, having a secure, safe, and depending on the entity, a regulated custodial or qualified custodial solution. Obviously, execution is quite common now in the space, but when you think about the financing and borrow lend component of it, typically over the last several years, it's been fragmented, right? There wasn't that one consolidated place, and over the last couple of years, obviously, we've seen a lot of those different solutions come together at various different endpoints in the space. And with that, the technology, the infrastructure to integrate all those solutions in one offering, right? So that's where I think, a lot of progress has been made, and a lot of focus is still there, is that necessary integration and infrastructure to those various different, solutions.
Okay, so where you guys are coming at this problem is like having like a pre-built stack of custody, some kind of I guess like lending pipes. Maybe that's like sort of like the policies that are wrapped up around your custody environment. Um, and and let's see, like what else am I missing? I guess like trade execution. Maybe you guys have like crypto specific, like trade execution software, sort of like plugged in there. Am I kind of like getting at the
Yeah,
idea?
so when you think about the digital prime tech stack, there's essentially two sides to it. One side is a white label, customizable prime solutions tech stack that is built to fit within the framework of a FINRA regulated prime broker, right? A very complex framework. And that side of the tech stack is customizable in a sense where our clients can pick and choose their preferred custodians, also pick and choose their preferred liquidity partners, and we'll do that integration on their behalf and overlap that with the borrow lend margin technologies that we built. So we don't provide custody, we don't provide execution. We integrate into various partners at our client's request for that specific side of the tech stack. The other side of our tech stack is a peer-to-peer lending platform. That product also, we don't provide custody for that product as well. We do have custodial partners here in the U.S. and non-U.S. that provide those services for that platform. So depending on what side of the product we're looking at, there's different customizable solutions available to kind of provide our clients what they need to operate in that manner.
So your clients are prime brokers. Your clients are not funds themselves, right?
Yeah, so the white label side of our tech stack is geared towards, institutions that are looking to be a prime broker themselves, right? And
Right.
our solution, again, was built to fit within the framework of a FINRA regulated long short prime broker, right? And
Got it.
that was a key part of our mission essentially from inception when we were seeded, right? Embracing those best practices, applying rules and regulations that govern traditional securities, and applying that to our software, our tech stack. And with that, we also embraced regulation at the corporate level. We did announce at the end of 21, I believe it was now, that through a wholly owned subsidiary called DLCC Prime, we are an SEC registered FINRA regulated broker dealer, permission to operate our prime brokerage solutions out of that regulated entity.
Very cool. Congratulations on that.
Yeah, that was pretty exciting for us, and
Sure.
again, a core component of our messaging, right?
Right. Right.
So, what do you feel like are some hangups with TradFi getting into PB in crypto?
Yeah, and I know all of us in the digital asset space has been waiting for the institutions, the traditional firms to come to the space, and a lot of progress has been made with the ETF approvals earlier this year. That said, I mean, I don't think it's uncommon. It's regulation, right? Clear regulatory guidelines that would allow traditional firms to kind of enter the space in a manner that they're accustomed to. So I think that's first and foremost. But when you think about prime brokerage too, I think what's going to really help expedite, the transition from traditional firms entering the digital asset prime brokerage space on top of regulation would be having either DTC or Euroclear eligible assets, right? Assets that are marginable through a central clearinghouse, so to speak, and that currently does not exist today. So I think outside of regulation, those types of eligible collateral types, so to speak, will be critical, right? Because the cap charges on the balance sheet would be prohibitive, obviously, if it's not a DTC or Euroclear eligible type of asset.
Do you think that crypto could end up shaping up differently from like when you talk about these sort of like a central clearinghouse framework? Well, in crypto, we sort of have like the development of these off-chain settlement solutions, where it's like you use a third-party wallet usually that then points to your exchange, and then you settle P&L within that settlement solution, where that P&L is just pointing to like a derivatives book that you're trading, right? And so that one's pretty straightforward, and I feel like that one makes sense as well from the perspective of the derivatives, because the derivatives are essentially like credit instruments where it's like, say you're trading like a perpetual swap. So when I talk about derivatives, I'm talking about perpetual swaps here. So it's like, say you're trading like a Coinbase International perpetual, and then you also want to trade a whatever another exchange is perpetual. Well, ultimately, and even if they're both Bitcoin USD perpetuals, right? Ultimately, those are each going to be credit instruments, like relative to the venues that you're trading at, right? Because they actually have to make sure those things operate appropriately. And if they don't, then that's venue specific, exchange specific. So I feel like those settlement solutions end up making sense in the context of those assets. Now that doesn't include spot, right? And I guess like this is sort of I'm going in a couple different directions here, and I'll let you take it where you want to. But I think when we also look at the crypto market at this point, the majority of volumes still are on derivatives, not on spot markets.
Yep.
And in fact, spot markets, if you're like an active trader, they can actually be pretty expensive to transact in, just because there's lack of depth, lack of volume relative to those derivatives.
Yeah, I think that's that's exactly right. I think the majority of the flow that you're currently seeing now in what could be considered digital prime brokerage is definitely more derivative focused. That said, our focus too at Digital Prime is really the infrastructure currently on the spot side, kind of helping build out the integration and the tools necessary to facilitate that side of it in a much more efficient manner. And I think part of it too is tokenization of your more traditional securities or tokenization of interest bearing digital assets as well. And I think that will obviously help make the prime brokerage space and digital assets much more efficient once you start to see that side of it evolve as well.
Well, why would that be? Why would the tokenization of those assets make it more efficient?
Well, I think going back to my previous comments where DTC or Euroclear eligible just makes it more efficient for a prime to operate in a manner that they're accustomed to without the burden of significant cap charges to their balance sheet for non-DTC or Euroclear eligible assets, right? It's almost prohibitive without having that. So if you're able to have a tokenized treasury, for example, that's DTC eligible, there's a lot of efficiency there in regards to cap charges, things like that, to make borrow, lend in the spot markets much more favorable from a cost perspective.
And when you say cap charge, is this like the financing cost or?
Yeah, so if you operate a prime broker, there's different assets that have different margin requirements or haircuts. At the high end, it could be 100% plus, right? Certain other assets, whether it's treasuries or other assets, along those lines, the margin requirement is much less.
And these are set by FINRA, to be clear.
Correct. Yeah.
James, could you explain what
They're set by the regulators. Yep.
could you explain what DTC and Euroclear are for people that are unfamiliar with
Yeah, so
DTC and Euroclear?
Depository Trust Clearing Corp is a central clearinghouse, a critical, component for traditional capital markets where assets are sit there at the DTC and can be borrowed and lent between other DTC members. Euroclear is the non-U.S. version of that type of solution, right? And those solutions don't currently exist today in digital assets. However, the DTC has a newly formed digital asset team that are looking to solve for that.
Interesting.
So it'll be exciting to see, what they come out with as time goes on. But they brought in a very talented group of folks that are obviously focused on that right now.
So these clearinghouses just have essentially a menu of whitelisted assets that can participate in these. Okay, understood. Got it.
Yeah.
And now, I think I'm going to be showing my ignorance here, but how much of the clearinghouse, how do I put this? How much of the clearinghouse's existence is there because there sort of is the the legacy burden in traditional assets where we have like these T+2 whatever it is sort of settlement periods, whereas with crypto it's like we have like we can settle instantly, effectively. Like how much of the clearinghouses are kind of like existing because of that, versus like they sort of offer up like financing efficiencies.
Yeah, and that's an interesting thought, right? Because when you move into an asset class that settles essentially instantly, what role does that central clearinghouse play then in that matter? But I think time will tell there. But I do think from an efficiency standpoint of having assets that are eligible with those clearinghouses, again, is really needed to for the traditional firms to kind of enter the space. So I think what we'll find as time goes on. And I guess we always look back on this podcast, years from now. But I think the solutions that they're going to bring to the table, obviously with regulatory clarity, are going to be what's needed, right? The markets are very efficient, right? And I think we're all, especially when you think about, your more liquid traditional markets, they're efficient markets, and I think the solutions that will come out over time in this space will equally be as efficient.
I mean, it seems like hopefully they'll have to be more efficient, right? Or else it's like, what's the point?
Yeah, yeah.
Yeah, it'll have to be quite an improvement, and that's
Yeah, I mean,
actually.
there's a lot of nuances, right, with a digitally
Right.
native asset, right?
Mm.
Not just with settlement, right? There's a lot in play there with that. So, but I think too, when looking forward, with potential tokenization of traditional securities and fixed income instruments, I think they'll be a little bit separate to a degree from pure crypto, right? I think there's going to there could be some nuances there that force some of the settlement processes to be a little nuanced because of that, right?
Yeah, right. And I guess just to go back to what you just said a moment ago, the clearinghouses are there. Kind of what I heard, and I want you to correct me if I'm stating this incorrectly. It sounds like you think the clearinghouses are going to be there kind of because that's what people are already using. It's like what they're already linked up to, essentially, right? And so it's like if crypto is going to sort of, move into being traded as an asset class at like the other macro hedge funds, or some multi-strat funds, or maybe that's the first places it starts, and then it's like it moves on to someplace else. It's going to have to kind of fit into the pre-existing infrastructure for that to happen. And now this is my comment, regardless of if it's more efficient or not, like regardless of it's.
I think, yeah, as you're phasing that in, it does make sense that it would be like a natural step to just plug into existing infrastructure if you can, before you rip everything out and replace it.
Yeah, but I mean, I think that it's like if we're thinking about integrating it into those clearinghouses, I mean, it is a whole other
Right,
thing.
right.
It's
It
a
is,
totally.
right.
Yep.
Yeah.
Yeah, and listen, it may not be a popular opinion with digital assets purists. In that sense, I don't think the whole traditional financial system is going to be replaced, right? To your previous point, Phil, I think there's going to need to be some adjustments that need to kind of plug and play into some of those more traditional rails, right? And I think that's going to be the more likely outcome versus a whole new ecosystem, replacing what everybody's been accustomed to all these years. And if it does happen, I think that's much further down the road, right? And probably past our lifetimes.
You had mentioned, I think you said the DTC is building out a digital asset team. What would they be looking at in order to add something to their whitelisted list of things? If you're just looking like at a tokenized security or a tokenized treasury, like I guess what would be their filter for what can get added to their list of assets?
I can't speak for them and what they're building, but from a filter perspective, right, it's going to be just regulation, right? That's going to be their main and only filter, at least initially. So I think they got a really bright team with a lot of tremendous talent there. So I think they're and again, I can't speak for them. This is just kind of me spitfiring here to a degree, but I do think there's you're gonna see them trying to emulate solutions from traditional finance and applying that to digital assets, right, in a manner that they feel makes sense, right, but still. That regulatory lens is going to be what either keeps them in a sandbox environment until there is clarity, versus having a solution is
Yeah.
going to be determined on that
Yeah, that
regulatory
makes
clarity
sense.
clearly.
Yeah, it's always interesting to me to see, like, we have this bucket of digital assets, but each one of these assets might serve a different purpose. It's run by different teams. It does different things. And so, even when you look at the SEC and they're trying to define what bucket do these fall into, you can't lump digital assets as a single
Yeah.
bucket. Now they're having to come up with their own kind of nomenclature. So I was curious when you look at something like a DTC where they would yeah, it's just interesting to me what their protocol is or would be for saying, like, yeah, we'll do this, no, we won't do this one.
Yeah.
Yeah.
What's interesting too? There's a couple groups out there that are currently working on solutions to have a DTC eligible asset in the digital asset space, right? And one group in particular we're extremely fond of, a group called RDC. That could also provide great content for a future podcast for you guys, given the solution that they're building out, and how directly it will correlate with the DTC. So
Right.
there's groups out there hyper focused on that right now for the same reasons that we kind of touched on previously, where you need to have that infrastructure and those solutions in place to get more of that traditional financial institutions into the space.
Right. Yeah, because we're going through a time right now where we've got these parallel tracks that we're talking about tokenizing these traditional securities while we're also essentially securitizing these tokens through, like, the ETFs and things like that. It's just interesting to see those paths play out in parallel, and
Yeah.
who each of those serve.
Absolutely, and the ETFs too, from what I understand, are DTC eligible.
Right.
That could be the first entry into maybe some financing on the ETFs, right?
Right.
From a prime brokerage perspective, right? So I think you may start to see some opportunities unfold in that side of the space with some traditional firms, and there's been some conversations that have come out of various conferences this summer where there are some traditional firms potentially looking to
Right.
finance those ETFs.
That's cool.
I'm surprised that hasn't already happened. It seems like that would be pretty simple.
Yeah, I'm not saying it didn't happen. Yeah, I mean,
Yeah.
they're focused on it now. Yeah,
I see.
absolutely.
Yeah.
Got
Yeah,
it.
yeah,
Got
yeah,
it.
yeah.
Got it. Got it. Um, so another question I have, and I think you can also kind of like enlighten me as to like the dynamics of the prime brokerage model. Just like given different economic environments. But if we're entering into a declining rate environment, front end rates are going to get slashed. I imagine this would compress PB financing rates, right? And I sort of see like a few. I'll tell you like the way that I'm, like the two scenarios that kind of come to my mind. It's like, okay, either one, the rates get cut, this affects financing, and this just compresses things and makes it even more difficult for sort of like crypto prime brokerage, which is a relatively fledgling, relatively nascent, fledgling maybe is not the right word, relatively nascent sub industry of our asset class. So it makes it difficult. Or what I could also see is that if rates are compressed, this sort of pushes people out the financing risk spectrum a little bit, and so this actually pushes more dollars into prime brokerage financing, because there's people seeking a little extra spread, a little extra bump, and so now all of a sudden there's actually more cash available from the prime brokers, and it's perhaps it's actually ends up being good for our asset class, I guess good in the sense of more liquidity.
Yeah, I think that's exactly right, and I would say there's probably two sides to that, right? I think access to cheap money, so to speak, is compelling to a lot of institutions that are looking to put on leverage, right? So I think that's helpful there. But then to your point, Phil, if the debt markets aren't providing high interest rates, that capital is going to go chase higher rates in a more riskier type of opportunity, right? Which, to your point, is obviously hopefully bodes well for the digital asset space, right? Because capital has dried up. Speaking as a founder and CEO, and talking to other founders in the space, raising capital in this environment has been a lot more difficult than previous environments. And hopefully there's a direct benefit, with lower interest rates as relates to funding some more riskier opportunities, chasing a higher yield, so to speak, right?
Right. Yeah. And again, this is me, showing my ignorance, but I assume that typically prime brokerage financing is going to be some spread over risk free. That would be my assumption. Something like that.
Yeah, that's exactly it. Primes like to operate a match book, right? Borrow at 2, lend at 3 type of thing,
Yeah.
right? Things along those lines. So
Yeah.
yeah.
Yeah. Nice. Dalton, what other questions you got?
Yeah, I was just curious. I don't know how much you could talk. Obviously, you've got partners that are PBs and they operate, and I don't come from this space. I'm not. Phil has educated me on all my PB knowledge that I've had. The only interaction I've had from our side is, this direct market access that they would provide. So, we KYC with one party and then they're able to open up. But, I guess I would just be curious what sorts of things, you talked about how there's these PBs and you're providing a tech stack that essentially allows them to act like a more traditional PB through digital assets, but are there things that you're excited that they're able to offer because they are digital asset PBs that might be even more exciting than what you already have in traditional PBs? Like, is there any sort of level up, or is there any sort of super sexy thing that these PBs can do being digital asset providers as opposed to what a traditional PB could do?
Yeah, and I think more of the exotic solutions available today kind of touches back on Phil's previous comments, where a lot of that is happening right now in the derivative space, right? And so I think more of those exotic solutions occur there, and not in the spot markets right now. But with that, I think where that converges does happen. The ability to utilize traditional assets to finance digital, I think is compelling, and I think there's a lot of opportunities now. Counterparty risk is a big part. We've all witnessed what happened in the digital asset lending space these last several years. So obviously there's a lot more scrutiny and probably much needed scrutiny as it relates to counterparty risk and counterparty management. And I think folks are kind of still a little shell-shocked of what happened, whether it was to their institution personally or whatever it may be, and kind of still, I don't want to use the word hesitant, but really taking much more a methodical approach, using more of your traditional risk metrics to identify, counterparties that you're comfortable with from a borrow-lend perspective. And, for us, when we look at our tech stack here at Digital Prime, specifically speaking at Tokennet, our goal was to, have those tools in place on Tokennet to manage counterparty risk, and also the life cycle of a loan too, the ability to re-rate, recall, the ability to return automatically, programmatically, the ability to mark to market 24/7 and kind of manage, LTVs and collateral coverage ratios, right? That was all a big part as we sat there and, as architects, building Tokennet and designing it based on, the requirements that we are accustomed to, our team was accustomed to in traditional finance. And so counterparty risk is a big component.
Is there anything that Digital Prime is doing for, I guess, the counterparties you're integrated with, outside of the lending side, the actual, technical integrations you're doing through the Digital Prime stack to help with that counterparty risk? Are you, looking at kind of exchange reserves or anything like that, or I don't know, updates from Custodians, or
Well, we have integration into a couple of custodial partners at launch. So we have a U.S. partner and we have a non-U.S. partner there that are both embrace regulation and look at the space through that similar lens. And we're blessed and fortunate to have those groups as partners. But the other side of it is the proprietary tech that we built within Tokenet to kind of manage, provide the tools to our counterparties to manage it effectively.
Right.
At Digital Prime, and again, speaking on Tokenet specifically, we don't deploy any capital. We only deploy technology. So we'll never be a counterparty to any loan that on Tokenet. We're just providing, what we feel is the best-in-class tools for counterparties to come engage with one another, whether it's from an origination standpoint, a loan execution standpoint, and more importantly, managing that life cycle of that loan with the various tools that we have within the platform. So, I think it's a critical component, especially after, what we all witnessed in digital asset lending, right? Having, those types of tools, that we've basically emulated from traditional finance,
Right.
but applied it to digital asset technology.
How do you think about like self-custody solutions and prime brokerage lending?
Yeah, that's an interesting question. And, I want to be mindful here. I think self-custody from an asset manager perspective could be a little tricky for their underlying LPs, right? So if you're a hedge fund manager and you're managing capital for various family offices and other institutions, and when they come in to do their due diligence, right, on you, and it's self-custody, I think that's going to raise a lot of alarms for various institutional investors, not having a qualified custodian sitting there in the middle. So, and again, this is a nuanced asset class, and the folks that are in the space currently have a greater risk appetite than what you would see in traditional finance, clearly. But I do believe that could pose some challenges from that perspective. You're an emerging fund manager, and you have a great 3-5 year return. You're looking to raise more capital to manage, and when these institutions come in with their DDQ, I think that could pose a problem because my fund manager has access to all those assets, 24/7, 365. Could be a little alarming there. But if you're a prop firm, right? If you're a proprietary firm, right, and there's several obviously large proprietary firms out there, then I think that solution, could make a lot of sense.
We just had that fund manager to get robbed of his keys at gunpoint, right? Just a couple weeks ago, and had his fund drained. So don't want that.
No, listen, I mean, the stories
Allegedly.
The money's gone, but
Yeah.
where it went, unsure.
Yeah, and issues like that, right, is a problem, right? And a lot of the custodians, as you guys probably are well aware, you need a quorum to sit there and transfer assets off the platform. You need various approvals from, several different folks within your organization to do so. And I think that type of solution does breed a lot of comfort, from an institutional investor perspective, right? So
Yeah. Yeah. We've looked at like pretty much every custody solution out there, I would say, or at least like the large ones, both across like the, I guess what you call like the self-custody or like the custody technology providers, as well as the qualified custodians. What has been interesting to discover has been that the line between the qualified custodian and the technology provider it's a blurry line. It's not, it's like they want to, sort of act like it's
Until you get invoiced, then it's very clear
Yeah,
which one's qualified and which one's not.
well, yeah. But it's somewhat of a blurry line. But this also depends on your setup as well, right? Because it's like you can, with the technology solutions that exist out there, you can set them up in such a way where you replicate very close to what like the qualified custodian setup looks like. I think that even when you look at like say insurance, for example, there are even solutions that exist now where it's like you can insure your self-custody setup as well, so yeah.
It's an expensive business model, though. I mean, obviously, there, all these asset managers are going to be have different levels of insurance and coverage, from a protection standpoint. But I know early on, in the space, those policies were, at some point could be prohibitive for some folks, depending on their AUM, right?
So as you're building this out, how do you determine what products you're going to integrate with? Is it just based off of demands and like potential client requests, or do you already have these relationships in place and you just know from the start, like, this is our roadmap, this is the custodian we want to deal with, or these are the top two, or is it a lot more, I guess, customer discovery and working with these PBs that are already out there?
Yeah. Well, I think there's two parts to that. When we first started building Tokenet, we put a list together of the various qualified custodians, right? And a lot of popular institutions at the time, weren't on that list because they weren't considered a qualified custodian.
Right.
So for us, it was at that time, during the early days of building Tokenet, it was kind of us, reaching out to relationships that we had and whatnot. However, as time went on during our development cycle of Tokenet, we did have a working group in place with various participation from digitally native as well as traditional firms. So we obviously put a lot of attention on that feedback from that working group and how we built Tokenet. Now, moving forward, it's client feedback. Right, what tweaks do we need to make? What other, different features, is needed for you to make this more efficient for you? Things along those lines. So I think, once you go from pre-development to development to production, the way you kind of approach that changes with each one of those, steps, right?
Right.
And now that we're in production, client feedback is critical for us in regards to our roadmap from a feature perspective, as well as integration opportunities
Right.
for us moving forward.
Got it. Makes sense. Makes sense.
What do you think the most immediate needs are for crypto prime brokerage?
Again, it's not uncommon. It's regulation, right? It's regulatory clarity, and and from what you read and what you see on TV as of late, I think perhaps we may see some clarity coming out sometime in the near future. Obviously, there's a big election here in the U.S. coming up, and both candidates seem to be, at some to some degree, pro crypto, pro digital. And I think that regardless of who wins that election, I think we can see some progress there. So I think folks are excited about that, and rightfully so. It's been obviously challenging, right, for a lot of organizations, dealing with regulators and taking up a majority of their bandwidth, either arguing or fighting or going back and forth with the regulators versus building, focusing on solutions and development and things along those lines, right?
Are there countries that you or your clients view as, I guess, I don't know, friendlier would be the word, but much better at providing that regulatory clarity? Like, are you starting to see kind of winners emerge from where your clients want to operate? Obviously, the U.S. gets a bad rap on the regulatory clarity, and I think it's similar in a lot of the European nations. But you start to see in the Middle East, some of these countries are coming up with a little bit more clear regulation. And we have some countries that are walking back regulation that are already established. I'm just curious if you're starting to see, kind of favorites emerge for domiciling or operating these businesses.
I think South America is becoming a favorite as of late. A lot of progress has been made coming out of South America. But to your point too, what we're seeing out of the Middle East, what we're seeing out of Singapore, right? You're starting to see some more clarity. And unfortunately, I do think, I do know that, a lot of groups, need to operate offshore right now, right? Because of the handcuffs, so to speak, of doing, operating in the U.S., right? It's challenging, it's difficult. And for us, it was a key part of kind of our offering, right? Embracing regulation from day one, filing our new member application with FINRA back in 2021 and embracing that obligation that we have being regulated by FINRA at the broker-dealer level.
Right. That makes sense. So you are currently operating out of the U.S. You are a domestic entity?
Yeah, our broker-dealer is a U.S. entity. Yep.
Got it.
But yeah, a lot of progress has been made, and I'll tell you this, and the, some of the smartest people I've ever came across are focused on the digital asset space right now. It's some of the smartest folks I ever came across. I'm fond of so many teams that are out there. And we're grateful that we have a good relationship with a lot of folks out there, and they appreciate the way that we kind of look at our tech stack, and not only how we develop it, but trying to embrace regulation, and more importantly best practices, and applying that to digital assets, right? Because it's a nuanced space, right? And if you separate crypto from DeFi, right? DeFi isn't necessarily an asset class that is easy for a traditional firm to enter. The lack of KYC, AML, not knowing who your counterparty is, I feel is always going to be proved to be challenging from a traditional perspective. However, there's several groups out there that are looking to provide solutions by adding a KYC level over it,
Right.
and I think that's going to be super helpful as well. But all of this takes time, right? And it takes a lot of time to not only build the infrastructure and the technology to offer that type of solution, but it takes probably even longer to get people comfortable with that solution.
Right, exactly. I mean, there was Ave's product. I can't remember what it was called, but it was a permissioned KYC lending market, and it really just, I don't think it really ended up going anywhere.
Yeah, it's a challenge, not knowing, without the even permission layer. It's challenging for traditional firms not knowing their counterparty, right?
Yeah,
Especially
they have
from
to
an
have the
asset
infrastructure to do it too.
Yeah, absolutely. And then it's education. It's getting people comfortable. And what I've learned, I've learned a ton over these last several years here at Digital Prime. But you get the first one, you get the second and the third pretty quick. You get that. It's harder to get that first one. And once you get that first reputable client, that first reputable investor, then people say, wow, they got to be doing something right here, that this group is a client or this group is an investor, right? And with that, it takes a lot of time. There's a lot of hand holding, and there's a lot of back and forth that goes through it all to get significant support from traditional firms, whether it's as a client or a user of your product, and or as an investor on your cap table, right? It's a process.
And now, how do you think about the current set of crypto, prime brokers, and heck, we could even lump like OTC desks into that kind of
Sure.
basket.
Yeah.
As incumbents, traditional finance incumbents, as they do whenever that happens, when they start entering the space. What do you think?
Yeah, I mean, listen, I think, upon regulatory clarity, if and when that comes, I think a lot of the groups that you're seeing operating today as a digital asset prime broker, potentially will be acquired, and that will be a traditional firm's way to enter the space, right? So I think that's a significant opportunity for a lot of startups that are out there focused on this space. And again, if done properly, overlapped with regulatory clarity, that's how I feel a lot of the traditional prime brokers will enter the space through acquisition.
Yep, that totally makes sense. That totally makes sense. It's going to be when that happens, it'll be interesting to see like how the sort of like infrastructure demands, and like what I mean is like explicitly like how the PBs are set up from their underlying counterparty perspective, and like from their infrastructure perspective, like what the what setups are ultimately okay with the traditional guys. Like what are they going to be comfortable with? Not that I think one big benefit of crypto is that, well, one, we've gone through like Armageddon, over the last
8
3
times.
years. Yeah, exactly. So there's at this point there have been best practices, I think, somewhat established in the industry. It's like we definitely, like, we ourselves, we have worked with quite a few counterparties across, like a lot of counterparties across, like a lot.
Definitely talked to a ton of them, yeah. But
Yeah,
I actually
and-
worked with them, even quite a few.
Right. And the you sometimes it can be challenging to if especially at first it was challenging to get a grip on some of these guys because you could find so many like nuances in their setup, you know. But like at this point, we've got it pretty down with how we need to like get a grip on our counterparties and underwrite their operation. Um, but you still see some pretty important nuances in those setups, and like I think especially when it comes to you know um, financing, there's some things where it's like you dig in and you're like, oh, you find like there's a policy that exists at the custodial layer that could potentially lead to some issue or this sort of thing, and that actually like to me personally, I think that that can still actually happen even with a qualified custodian sitting there in the mix, because like a lot of times eventually you have to get those assets out of the qualified custodian's environment. Like the qualified custodians at this point just don't offer the full there. It's like at that point the QC would have to be the PB themselves, basically.
Yeah.
And they just don't offer like the full suite within that custodied environment yet. And so then what that ends up meaning is that then it's like you have this whole operation environment now for like basically where funds are going to be flowing around, and then you need to have the appropriate policies sitting over top of that environment. And um, and if there's sort of like if there's one thing that sort of is not set up appropriately, then uh, it could be like potentially catastrophic, right? But just because of the way crypto works, right? Like you have one transaction, and that's it. Can't get it back.
Yeah, no, it's challenging. There's no question about that, and we're starting to see now some qualified custodians rolling out collateral management solutions, which I think is helpful. As opposed to more of your traditional or bilateral type of borrow lend experience. So I think that's going to play a major role in the space on a moving forward basis. But to your point too, from a counterparty perspective, right? And I don't want to speak out of line because what we're focused on is providing technology and not acting as a counterparty. But there is a lot of nuances, right? It's what does the documentation look at the custodial level? What does the language look with my, whether it's a master lending agreement or a master repo agreement, right? What are the nuances in that, and how to approach that properly? Probably is even more important. And then from there too, how many counterparties does this counterparty have? How much financing, how much risk, how much
Yeah.
leverage does he
And which
currently have?
ones?
Yeah, which ones, and then outside of me, right? So
Right.
there's a lot of work to
Yeah.
be done,
A
in
lot.
regards to do that.
Yeah, yeah, and even it's funny. Like even when you look into the qualified custody setups, what you end up finding with a lot of the QCs is that their infrastructure kind of rests on like a lot of times there's going to be like a offline segment of their custody, um, but you found that there is like a this offline portion, right, which would be like it's like you have like a data warehouse, and it's has this like high physical degree of security, and then there's some data redundancy to that, the storage of those private keys, and it's like in order to access those funds that are in like ultra super duper cold storage, it's like you physically have to go access it, or you can also now I think pretty much everybody has some kind of a technology solution to like access that without having to physically walk in, and like at the time they were literally printing out QR codes from this machine.
Yeah, I remember those days quite well. When I left traditional finance, my first stop in digital assets was head of securities lending at T0. And that was in 2016, 2017. And I remember the cold storage, underground type of solutions that,
Right.
were the big focus back then, right? And
Yeah.
obviously, it's not efficient for an active trader or an
No.
active trading strategy. For a long only holder, I'm sure there's a lot of benefits there, but the space has evolved so much. These custodians, they're building what their clients needed, right? And a lot of the folks in this space are obviously quite active, and that type of solution really wasn't going to allow them to manage their business in the way that they needed to. So they had to evolve as well. And I think they've done a great job. These custodians, I think, come a long way. Obviously, again, there's a host of stories out there where things did not work out for various institutions, but hopefully on a moving forward basis, those stories are far and few between, right?
Yeah, it does seem like with the like I think specifically with like the prime brokerage business model and the qualified custodians, like depending on where things go, it's like if there is the demand that a qualified custodian must be used for, like if you're going to access PB, it's like, okay, so you go touch PB XYZ as a fund, as a U.S. regulated fund, that PB, they themselves need to be using a qualified custodian underneath the hood, right? And if that's the case, then right now it seems like maybe it actually ends up being the qualified custodians who end up becoming the PBs. Just because you do, it's like, okay, so if you're going to do, you say you're going to be settling a derivatives book, say you're going to be settling, just like your financing costs, whatever. It's like you have all these different products that you're wrapping up under this trading operation. Well, if you have this trading environment of these different, say like derivative venues, you need to settle the P&L in those venues. Well, those if that's going to be under the QC hood, then like the QC kind of has to be controlling the policies that sit on top of those relationships, and because otherwise, if it's like the PB is linking into the QC, then the QC is going to have to send funds out of the QC environment to the PB's environment that then touches all those other underlying trading counterparties. So then there's like this bifurcation in the protection, if you will. So I guess that's my way of saying it's going to be interesting to see like how that shakes out, both from like a regulatory requirement perspective, but then also just from a straight up technology and sort of like, current space of, who's building what perspective.
Yeah, and I think you're starting to see too a lot of qualified custodians starting to focus more on a prime brokerage offering, and building some meaningful businesses there. Right now what's challenging is most groups are fighting over the same business. So until you have more of those traditional asset managers, traditional service providers enter the space, it does prove to be a bit challenging from that perspective. For us though, one thing that we're really proud of in regards to, I'm going to focus on TokenNet here specifically for this point, is that solution, that platform, that product that we built is bringing new participants to the space. Folks that were never active in the digital asset borrow lend side. They were, had a presence in digital asset space, but not on the borrow lend. And then, when they had a chance to get to know us, see what we built, they felt that now they have the tools that are necessary to kind of manage borrow lend accordingly. So without naming names, we brought on, several new institutions into the borrow lend space, both from an inventory perspective, folks that never lent out their inventory before, and then folks that never borrowed before too. And it's something that we're super proud of, having the ability to bring on new players in the space. And as whether it's our business at Digital Prime or whether it's at different custodians and other platforms that are operating in the space, the more they, kind of focus on, regulatory, type of best practice type of solutions, they're going to be able to continue to do the same, right? And it's just going to evolve over time.
How many crypto prime brokers or people engaging like crypto prime brokerage activity broadly, like how many do you think there are right now?
It's a difficult question to answer, and the reason why I say that at first, and I'll dial down on it, but prime brokerage in digital is defined a little differently than prime brokerage in traditional. At first, the first wave of prime brokers that came out in the digital space was the ability to trade with various partners. Right, and that was a prime broker. There was no financing involved. There was none of the other nuances that you would see, margin, repo, securities lending, all that stuff. So, there was a big bucket of what was considered a prime broker in the digital asset space. Now, however, whether it's a couple of the custodians that are operating a prime, offering custody, execution, and financing, they're out there. Clearly, there's definitely several startups in the space that are building wonderful businesses. Outside of that, there's several DeFi solutions. Considered a digital asset prime broker. So I would say, realistically, no more than a dozen. But I think you're gonna, from what I understand, and I need to choose my words carefully here, I think you're gonna start to see and hear about new participants coming into the space quite soon.
Excellent. Well, I think that's.
Actually, I did have one question, James. I don't know if I heard you were saying that your first job in digital assets was at T0 at their lending desk, I think. What inspired you to make the transition to digital assets?
Yeah, so at the time I was at Cantor Fitzgerald on their prime brokerage team, and like a lot of us in the space, just caught that crypto bug, just kind of seeing what was evolving and how fast the space seemed to be moving at the time, and T0 was a group that was looking to really solve for crypto prime. I was brought on by the co-founder and CEO, and that was his vision, right? And to really build the infrastructure and the technology to facilitate a crypto prime broker. And for me, that opportunity was awfully excited from an entrepreneurial spirit, right? Kind of being early on. I don't want to use the word pioneer, but being with a very innovative team. A very entrepreneurial team that was looking to solve for that, and being part of that was just super compelling to me, and
Right.
and I just dove in head first, man. I loved
Very
it,
cool.
and I haven't left since. And listen, when you operate a startup, there's a lot of ups and downs.
Yep.
9 times out of 10, there's probably more downs than ups. But I'm still here. We're still doing what we have to do, and it's exciting.
That's awesome.
Awesome. Well,
That was it. That was
cool.
it. Yeah.
Awesome. Well, James, thanks for making the time. It sounds like it's just in time. The weed whackers are chopping in the backyard there. So, yeah, thanks for chatting with us, James. This was I found this really enlightening, and I think there's going to be a lot of people that are going to be interested to hear about this intersection of traditional finance and prime brokerage and crypto.
See you, James.
Thanks, James. Bye.